This video is sponsored by Terrell Hutton, who makes the invisible investable. Today on the CEO Barbecue, low sulfidation epithermal gold and silver development in Jalisco, Mexico, together with GoGold Resources. But if you're short on time, subscribe to our free newsletter, and once a week, we'll send you a 5-minute summary of all interviews we put out. resourcetalks.com for a free weekly newsletter. Now, although this company has paid us for the production of this video, you should still understand that we are not financial advisors, and this is not intended as financial advice. It is a broad, general, and impersonal piece of information intended only for those who know and understand the risks of junior mining, of which there are many. Before moving on, read the company's official filings on setterplus.ca and do your own due diligence. Pause the screen and read all the disclaimers I've shown you because your capital is at risk. If this isn't clear, go to the last section of this video for a longer explanation of the risks and biases, and do not consume this content if you don't agree with everything said therein. Moving on, GoGold is actually a company that already generates free cash flow from a tailings operation that they have in Chihuahua State, while also advancing a historic silver and gold district in Jalisco, which is going to be the focus of the conversation today. What happened there really is that in 2019, they consolidated the ground, digitized the old mining records, and systematically drilled the remaining mineralization that earlier selective operations had left behind. Very interesting. Something that we'll talk about as well here is that it goes back to the 1500s, back to the Spanish times. Fast forward a bit, though, and now they have a permitted underground project that's moving into construction. It's also backed by a cash position that currently exceeds the published initial capital estimate from 2025, though, of course, that's something that I'll be asking about later on as the conversation progresses. Flagship is called Los Ricos South, specifically because there's a north portion of it that we'll talk about as well, but it's a low sulfidation epithermal silver and gold vein system located in Jalisco again, so it's roughly 100 kilometers northwest of Guadalajara. This is an advanced stage asset, though, so they're building it as we speak, and January 2025 feasibility study had about 91 million ounces of silver equivalent in it at about 276 grams per ton. After receiving the final SEMARNAT approval about 2 months ago, they also approved construction on this asset, and that will, of course, be the biggest part of this conversation as we move on. As they're working on the development, parallel drilling and engineering continues on the larger Los Ricos system. So Los Ricos North, for example, that's a short distance away from Los Ricos South. That already carries a PEA on it, and it's intended to follow Los Ricos South into development once the first mine is operating. As I mentioned, Parral, that's the tailings operation that they have. That remains the cash engine, but more about that later on. So I want to know what's the LOM and so on and so forth on that. So definitely talk about it. Now, for some of the numbers and more details, GoGold is listed as GGD on the TSX main board in Canada, where the average volume of the last 3 months has been about 1.7 million units a day. The 52-week high is $4.30, and the 52-week low is $2.21. With 434 million shares outstanding and a $1.83 billion market cap today, this is a $4.21 stock. There are 14 million options and 27 million warrants that are still outstanding, which collectively represent less than 10% of the 475 million shares on a fully diluted basis. The last time they raised money was in late last year. It was in November of last year, closing a $144 million bought deal financing at $2.65. Had a half a warrant on it for 3 years at $3.50. How much money have they got left right now after the build out has kind of started? And will they have to go back to the market before the build out is finished? Those are, of course, questions they'll be asking later on in the conversation. But for this to actually become a conversation, though, I will have to shut up already. And Brad, I'll give you the word here. But first of all, thank you for sitting down with me today.
Antonio, great to sit down with you and your audience.
I'm looking forward to catching up. Really, the story has changed so much since you and I last spoke, which I think was a couple of years ago. Then I think it'd be better to maybe take it from the top and kind of do a complete review of the history of the asset and then the time and the money that you're going to need for the future of the asset. And I actually want to start off with the strategy as a whole to set the stage here. Are you and the team that you currently have in place right now the ones that are going to build and run the Los Ricos district, or will you be looking for an exit here sometime soon?
Well, really, you never know what will come, but we've been in Mexico now for 30 years. And actually, the Los Ricos asset will be the the fifth mine that the team has built in Mexico. And I say the team because many members of the team have been with the team for over 20 years. So we certainly we are prepared to build the asset, operate the asset, and do that. You never know what might happen. I mean, it's a small space, the silver space, as far as kind of pure silver producers. And I mean that more than byproduct of, say, base metals. We are 60% value silver, and about 40% of our value is gold. And, we're well prepared for this project in that we waited a while for a permit, and about 3.5 years, which, my time in Mexico, the last 30 years, we've never waited that long for a permit. And a lot of that was kind of political with the last president. There wasn't much happening on the permit front. But as soon as the new president got in, permits started moving again. And we're very happy to say that we have our permit and we're ready to go. And part of being ready to go is that we didn't totally waste that time sitting waiting for the permit. We did a lot of engineering and preparing for the build. And in fact, we're about 85% complete, our detailed engineering. We've ordered long lead time components, like the SAG mill 6 months ago, and filter presses, so that everything is all geared up so we're ready to hit the ground running. And, part of that is that we have, as of the end of the quarter, 284 million US cash in the bank with no debt. I think you mentioned that. Part of it is that with all that engineering done, we've been out getting bids and signing contracts for the build. And really, just last week, we broke ground on the site with the earthworks. So we're now going. So it's 24 months in the feasibility study, 24 months to achieve first gold pour. Silver pour, I guess I should say, silver gold pour, and another 6 months to ramp up to full commercial production.
That's a good summary, and it's actually funny when you think about it that a lot of silver companies out there are rushing to put silver in their name, even if they might have 20 or 30% credits of silver. Whereas, like with you, you're called GoGold Resources, but it's actually more silver that you have. Are you thinking of changing the name?
Yes, that changing the name. Yeah. That's right. GoGold, where we started in Parral, retreating tailings. And there were a lot of silver in those tailings. They were actually more silver than gold, about the same 60-40. Then we had a project, the Santa Gratudas project, which was a gold project. That project, we bought it for $9 million. We expended 11, and then we sold it to Agnico Eagle for $95 million. So we're all ready to build a gold mine there. And then in 2019, March 2019, after selling Santa Gratudas, that paid off all our debt as far as building Parral, our operating asset. And then we were looking for the next thing. And the next thing was Los Ricos, March 2019. And Los Ricos has a lot of gold, but I mean, it's 60% value by silver. So we tried to rebrand as GoGold because so many people knew the name GoGold, silver and gold. So at this late stage, probably not going to change the name. I mean, the stock reacts very well on really up silver days. I think everybody pretty much knows it's a silver gold company.
I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terrahutton.io. That's what I was going to say. Is like you've been doing the round for a long time now, and
yes.
It might even be working for you, where it's like memorable exactly because people are like, oh yeah, go, it's a silver company, so it kind of makes it funny there. But
Just
yeah,
trying to confuse people, I guess.
exactly. What you confuse them and they remember it.
Yeah.
I'm gonna have a lot of follow up questions as the conversation moves on there, especially in the mill. So timing and then money and everything else. But
Sure.
before that, we're gonna have to do what I call the smell test before we get into the actual barbecue, which is
Hmm.
really intended to better understand the track record of and the incentive for management. But I first have to understand what kind of man you really are, Brad. So the most important question today, or at least since this is a barbecue after all, I'm going to ask you, how do you like your steak?
How do I like my steak? I like my steak medium well.
Medium well. I don't get that a lot. I get a lot of medium rares. How come not medium rare?
Not medium rare. I guess I'm more of a fish than a steak guy. So
Oh, okay.
coming from the east coast of Canada, we have a lot of fish there.
Well, I was going to say is that maybe your background is going to explain that for you. Talk to me a little bit more
Yep.
about your background. How did you find your way into the mining industry? What did you do before?
Yeah, before the mining industry, I mean, I studied geology at university. I'm a geologist. I actually, when I left geology, I took a few diversions. I owned property and casualty insurance agencies. When I was very young, and I sold those. I never flew on an airplane until I was 25 as a passenger. But by the time I was 29, I was just terribly bored with insurance, so I became an airline pilot. So I was an airline pilot, and airline pilots, you don't work that much. So I ended up with a lot of time. So to fill my time, I started doing some in Nova Scotia prospecting. Anyway, long story short, led to Mexico, and then came down to Mexico, still a pilot. On my days off, I was building a little company, started in the garage called Gammon Gold. But that became pretty serious because we found 7 million ounces of gold there, gold equivalent. So we built two mines there. We built a 12,000 ton a day heap leach, and moved about 100,000 tons a day in an open pit. We built an underground mine that was 1,500 tons a day, and so we went in there, blasted the portal, did 50 kilometers of development. Much like we're doing at Los Ricos, really. The old saying, if you knew what you did know, you may not have continued. But fortunately, we didn't know what we didn't know back then. It was, but we pulled it off. And those two mines ultimately, that company grew into a company that, when I left, it was traded at about 2.2 billion after it reached commercial production. Brought in some more assets, sold some assets, sold the Ocampo asset for 750 million cash to Carlos Slim. And then the company actually ended up eventually merging with Alamos Gold. Then we have Mex Gold. That was another one we did where we had a mine, underground mine again. I've probably more underground experience in my career than open pit. But we had a mine that was on its last legs, and we went in there. Basically, it was ready to shut down. We were able to revive it. We had a shell, the Mex Gold shell. We financed that with 45 million with the Bank of Montreal out of the gate, and then we doubled the production in that mine. And 3 years later, we sold it for 375 million. Nairi Gold was a small one. We had a small discovery. We sold it Capital Gold in 2010 for 80 million. And ever since it's been GoGold with a sale of an asset to Agnico, which I mentioned, and our operating mine, which has now been operating continually for 12 years, our Pearl tailings retreatment project, developed new technology there that has served very well for us and served very well for the community and in the environment. And but again, now we're off to do the flagship of the company, which is going to start with Los Ricos South, and that build is underway.
Well, I would typically follow it by asking executives if I follow along with your career with my capital, would I have made money along the way? But it sounds like in your case, the answer is definitively yes. What about right now? What do you do? Anything else right now? Any other C-suite jobs, board positions, anything else that takes any of your time?
No, really, the only board I'm on is GoGold, and the only executive role I have is as CEO and president of GoGold, and I have been that since 2016.
You do
Now,
nothing.
I'm founder of a few other companies. That others in Mexico after all my time in Mexico. But I focus my attention on GoGold for sure.
Like other mining stuff, or is it something else you do?
Other mining companies, there's Axo Metals is one that founding member of in Silver Tiger.
Okay. Yeah. Interesting. What in terms of skin in the game, which of those positions is kind of like where do you have the most skin in the game, and how much skin in the game do you have in GoGold?
So in GoGold, I have a lot of skin in the game. I think I'm the second largest reporting shareholder behind our institutional shareholders here, who or behind some of them, or at least one of them. And they, we'd be about 50% institutional. We'd be about 30% retail. And then management, myself, I guess you'd call it some friends and family, people in Halifax who've been in the stock forever, would be about 20% of the company. But no, I have a very large stake in GoGold. Yep.
How many shares do you own?
I would own 16.5 million shares of the company.
Yeah.
Yeah.
Any idea how much you paid for those shares? Is there, part of it is that founder shares? Or what does that look like? Yeah,
those a lot of those would be founder shares. I mean, I paid anywhere from, the founder shares originally, some of them would have been 10 cents. And, I would have bought shares up to $2. So,
okay.
So you feel like on average, I would say, in sub $1, but I've been at it now for how many years? 14 years.
Wow. Do you feel like you might be increasing that skin in the game? I mean, is this a good point for you to be buying shares?
At this point am I going to go buy several million shares in the market? I'll be honest with you, probably not. Beyond that, I have my my stock-based compensation. We have options, which of course exercise options, and that would bring me up to about 20 million of holdings in the company. So, at some point you have to have a bit of a diversified portfolio. But I'll tell you what I've never done. I've never been a seller of stock. I've donated some stocks, a few shares to my charitable foundation.
How are you going to make money on this for yourself, Brad? I mean, looking at this, sure, you have a paycheck, but that's not really like a wealth building operation there for you, but just by the looks of how big it is and your relative position in the company. So what's the end game here for you? Like, wait for a dividend? Probably, that's still a couple of years away, or because you say you don't sell shares. So yeah, how are you going to make money on this?
Yeah, I'll make money when everybody else is making money, but I really see, if you look at this space and if you say, what is out there, for in an M&A market, what is out there? I'll tell you one thing about M&A and the mining space. Not a lot of guys, not a lot of groups like doing the hard part, and the hard part's building these things. Now, we've done it several times. So we're going to get this built. I think after it's built, there's a lot, the list gets a lot longer of potential acquirers of the company or the asset after it's built. You never say never. Somebody might appear on the scene and really offer a great deal. Obviously, we have to, consider any real bona fide deal, and we'd have to bring it to the shareholders. But today, what we're focused on is getting a mine built. And not just getting one mine built. We're looking at this as more of a district build. And in that respect, we have Los Ricos North as well, which is kind of the second leg here of what's going to happen in the district. Los Ricos South, now let me start. We have about 2 million ounces that we've been producing at per hour equivalent, and it changes with the silver and gold price. We talked about silver equivalent, but Los Ricos South, when that's built, it'll add 7.2 million more ounces to the picture. And those ounces are at all-in costs of sub $12. So that brings us up to over 9 million ounce a year silver equivalent producer with top quartile costs. That is pretty rare in the silver space. But you add on to that Los Ricos North, and our business plan is now on a parallel track to get Los Ricos North ready for construction. And it's an early stage study now. It's a PEA. So it has in the PEA, it's projected to produce about 8.8 million ounces a year to give us the company to become a 15 to 17 million silver equivalent ounce a year producer at all-in costs of about $12. So that's a real rarity in this space. I mean, that's a large mid-tier in our space. So with that, I think there's probably going to be a lot of interested parties. So I guess we just have our head down and get that done.
I like that. I like how you walk me through the way you're thinking behind this, and that's again, bottom line. That's what it comes down to: is show me the incentives, and I'll show you the outcome. So it's good to understand those incentives for you. I'm just going to keep running through the smell test,
Sure.
and I promise the boring, quote unquote, boring part is going to be done here soon. But what about what's the royalty situation on the project right now? South, but also maybe just the general Los Ricos district. What's the royalty situation?
Yeah, in the south. Technically, there's a royalty that existed, and we bought it out. So we own it. So there's no real royalties in Los Ricos South. Los Ricos North, on a few of the concessions, there's some small royalties. But the good news is that they can be bought out for all of total under $5 million. So pretty irrelevant.
Yeah. Who owns that? Is that someone within management or something like that?
No, God, no. No, other companies. That on that asset, when we did the deal there's a small royalty.
Mm-hmm.
Yeah.
I like the addition to your answer there. It was not a simple no. It was a God no, which is the only right answer to that question. And I'm
Yes.
glad that's the reaction.
Yes.
The reaction is half the answer, actually, in my opinion.
Yeah.
Anything else on the project, contingents like ROFRs or clawbacks, anything else, or you just own it outright and it is what it is?
We own it outright. We have no debt. 284 at the end of last quarter in the bank, and I'm sure today it's probably closer to 290. So
yeah. One last thing. There's not been a rollback, has it, in the history of the asset? The company?
A rollback of the stock? No.
Yeah.
No.
Well, are you considering one right now as you're going to go into production? I know some companies want to do it with like kind of like a big milestone or something like that.
Does it really matter? It's just math. We're trading at $4 and change right now. To me, it's more about market cap. There might be, if we decide to go and say trade on the New York Stock Exchange, that might be an opportunity if, maybe you do it then, right? With our stock price today, I think we're above the minimum trading price anyway.
Yeah.
For the exchange.
Yeah, you probably are. Again, over $4 today, so that does make sense.
Yeah.
Enough smelling here, Brad. I think let's actually talk about the asset here, because it's got a pretty long history of exploration, but also production, and it's been a known silver source for over 500 years now, dating back, as I said earlier, to the Spanish colonial times. This small family operations continued kind of through the 1800s, and then early to almost mid 1900s, you had CMMC operating it. Developed, decent production, too, significant infrastructure. They built a road. There was a 220 kilovolt power line that is still functional today that I want to ask you about later. But so my point is, or my question here is, it's a very well-known mineralized district, but it sat kind of idle for decades before you came along. Why was that? Why was this not more heavily worked after the 1930s?
Yeah. So first of all, like the 1930s part and the history, you're right. It goes back to the original Spanish, but the real big activity here was in the 1908 to 1930. And that's when they developed this mine. And it was the same people that were behind Anaconda, the same family, the Daly family, but it was Marcus Daly was considered the copper baron. The thing there is that his son. It was his son who owned this mine, and a U.S. Ambassador was the president for these 22 years. So that's when most of the activity happened. And they built this mine in Los Ricos South, the Cinco Minas mine. And that was a very well-run mine. And unfortunately, in 1930, the political situation in Mexico, basically a revolution, and all the foreign companies left. If you look at all these big districts, they all left in 1930. So that's that part of the history. But then what happened? What happened after that was that the asset was actually then acquired in 1980 by an individual. And he originally worked for the majors. I think he was out looking for projects and he found this one, and then he quit his job at the majors and went with this project. So in that, it was in one individual's hands for right up into the early 2000s. And then, basically trying to, I think probably, my understanding of the history is it was probably trying to be built on a shoestring, and that didn't work. So it went kind of through a bankruptcy. And in Mexico, a lot of the issue with the bankruptcy is employees. I mean, the people who work there, and they ended up owning the asset, and we acquired it through some lawyers who did deals over the years and cleansed the asset. And long story short, in 2018, got to a point that was all cleansed. And in 2019, we acquired it. But really, the being in Mexico 30 years, because the first time I ever heard about this asset was in 2006. And several times we looked at it, because known as a great geological target and something that should be built. But the issue was all that other stuff. So when that other stuff was cleaned up, been following it since 2006, and we were ready to move when we knew it was good. So it's one of the things, being in the country so long, we have our network, and I know other assets that I follow, and that's how we've acquired a lot of our assets. Follow them for maybe a decade, and then the opportunity arises.
So to figure out what you're going to be buying 10 years from now, I should ask you what you're following right now, and maybe I will later on. But you also digitized a lot of it, so thousands of pages of the original CMMC monthly reports and whatnot from the Missoula archive, I believe. So the stuff that was happening before the 1930s. Yep. What were the main challenges they were struggling with back then?
Well, not real challenges. I mean, just when we first acquired the data, we knew the mining district was good. We had done a bit of work, and there's so much limited data. And that data that you mentioned, Missoula, Montana, that came from going to the Anaconda Archive. And we have a guy on our team. His name is Dave Duncan. And Dave's our most senior staff member as far as geology, but he's a historian as well. So he loves that. So, and always when we go into a project, we look for any data that might exist. And that's what Dave did. He went to the Anaconda Library and they said, no, there's nothing here, which is strange, but it wasn't really an Anaconda mine. It was the son of Marcus Daly. So, but the guy was an ambassador, the president of the company, and he went up to Missoula, or he had an archive in Missoula, Montana, and that librarian in Colorado said, you should go up and check him. And Dave and Jose Carlos, one of our other great geologists, they went up there, and she said, yeah, there's these boxes and boxes of stuff. Had been open for probably 70, 80 years. And in there was every record from this old mine. And it was a really well-run mine for the 1920s, 1930s. And they took all of that, digitized it, and it guided all the work from then. It guided all the exploration. So it was really, really, really helpful. And then in Los Ricos North, there's data if you look for it. And there's it's called the monograph from Jalisco. And in that monograph, it has a map that we've used in Los Ricos North. And all those crossed hammers you see on the screen there, those are all old prospects, old mines. And we started with the ones that were more well known in this area. And that's where we developed 161 million ounces of silver equivalent in resource. But then, we haven't even looked up here, kind of in this part of the property. We've just focused here. And, that's kind of all over the property. There's other places with so much exploration potential. But we had campaigns where for about 3 years, we were drilling, sometimes 7 drill rigs running. And every 2 weeks, we putting out press releases with kilos of, silver intercepts. And after a while, especially our institutional investors and all of our investors started saying, tell us what all that means. These guys said, tell us what's your kind of roadmap to advancing the project? What's your roadmap to construction, cash flow? What's this thing going to look like when you apply economic studies? So that was the next phase, and that brought us to where we are right now and breaking ground last week. And now it's the construction phase. So now it's all around execution. And that's really our focus now, to execute this build and execute it as closely as we can to plan, to build that mill, to build that 2,000 ton a day mill, which is a whole ore leaching mill. And what I mean mostly by that is that we don't produce a concentrate that we sell then for maybe 80% of the spot price. We produce here a doré bar that will mostly obviously be silver. And that bar is sold at 99.5% of spot. So that's the next phase. That's where our focus is. That's our concentration, and we're going to get it done. I have full faith in the team and the contractors we've hired that we're going to get this built. That's part of it. The critical path will always be the underground development, and we recognize that, of course, early in the feasibility study. And, that just goes slower. The mill, really, with all this detailed engineering completed, we might even come in ahead of schedule on that mill. And, but, this is why we're pushing so hard now to get underground and try to get a pile of material beside that mill before it turns on, so. But anyway, the schedule is 24 months to build, 6 months to ramp up to full commercial production. And full commercial production is pretty exciting. I mean, as you mentioned, the grades are very good. Really important here is that the widths are very good. This is truly bulk underground mining. Sub-level long hole mining, longitudinal and transverse. But really all you have to take from that is that it's very productive mining, with the average stope width being 11 meters wide. So, and within that, obviously, if you can, in your life of mine plan, if you can design it so that early on, you're mining from very high grade areas, that also helps. And this area that I marked on the screen there. Now, if you look at the legend, the dark blue is better than a kilo. And I'll tell you, there are stopes there that are plus 20 meters wide, where the grade is better than a kilo. And at current prices, this area would supply the mill for about 18 months and be at the front end of that mine plan. Obviously, we're not going to commission the mill with that stuff. We want to get that mill working really well and really smooth before you feed this kind of ore into it. But that would generate over $500 million US after tax in 18 months. So, this is a high margin project. And, it's got a team around it that knows how to build mines. And we've been doing this for a long time in Mexico. So we're focused on execution now.
I'm going to have a couple of questions about that later on for sure.
Sure.
Just going back to the history here, Brad, and trying to understand what happened there. Also, going early 1900s, right, early to 1930s, mining wasn't up to par with how we do things now in mining and the current regulation landscape and all that. So,
Yep.
are there any kind of liabilities, environmental or financial, whatever else, that you're still left to deal with today?
No, we went in there and we're big tailing guys. Our other mine is reprocessing of tailings. Can't really find any. I don't know in Los Ricos South anyway. Must have long since been washed away. But no, not we didn't identify any real environmental liabilities from past operations. Um, and it goes without saying, but I just want to mention before what we are really focused on here is the build, and part of the perfect execution is safety. And that's we put a big focus there. We have a great community there. We have a great community social programs. When we got the permit here, they came out and they literally knocked on doors in the community and say, "What do you think about this mine? Are you in favor of this mine?" It was unanimous. The community was fully behind it. So, those are some of the things that you really have to focus on when you're doing this. But building these mines are not easy, and you have to treat the communities right, and obviously they want the jobs, but we want what we have to focus on, along with the engineering and safety and making sure that everybody goes home every night, and it's a very safe operation. So. Yeah, that's a major focus here: community, safety, environmental.
What about some of the positives that I mentioned earlier that were left behind? So the road that they build, CMMC build a road, they put in a power line. Is any of that still is it still usable today?
The roads, it's a drive-in camp. I mean, we drive into there. Obviously, we'll be improving the road for ourselves and for the community. Power line. We're building a new power line. We're building it from the AISC hydro dam, which is about 36 kilometers away. So that most of that is on existing right-of-ways, and the right-of-ways that we had to acquire, we've now acquired them from the same ejido, which we have our agreement to build on their land. So that power line is underway, and it'll actually be two 35 kVA power lines that will come in there versus the higher tension power line. That gives some added redundancy too if one of the lines gets hit by lightning, for example, during the rainy season. So that's all underway.
There have also been a few iterations of the mine plan here, and therefore the economics have changed a little bit. Looking at your own work and the difference between your 2023 economic study, so the PEA, which must have been right around the time we first spoke, and then now the 2025 feasibility from late last year that I outlined in the overview. Your resource got way bigger, got higher grade too, as you mentioned, but the NPV fell like by $100 million or something like that, despite again much higher metals price in the meantime as well. How come? What really happened there?
Well, yeah, you're talking between PEA and the feasibility study. There's a couple things happen. One is that in a PEA, and for your watchers, I'm sure you know it, a PEA is plus or minus 50%, right? And it's really the amount of data you're working with, right? Then as you advance into a pre-feas, it's plus or minus 25%, and a feasibility is plus or minus 10%. So part of it's just going to the higher level studies and understanding the asset better. But a big difference also is originally in the first PEA that we did here, the plan was to have this all as a open pit, and this was very early on. And the thing about open pitting here, would have been 9 to strip ratio open pit. So that would give you the best NPV for sure. But the political climate in Mexico was not very favorable for open pits. So we went back to the drawing board and we said, this is a very good bulk underground mine. What would that look like? So we did an underground mine plan with at the tail end a very small open pit. And although we showed the community what a 9-to-1 strip ratio open pit would look like, we just decided that with the community there socially, and we have such a good social license here, I don't think having those massive waste dumps next to their beautiful little pueblo would have gone over that well. So we were willing to eat a bit of the NPV and came up with a very good underground plan, which has 12 years underground mining. And at the very end, it's a very small open pit, which takes out some of the halo closer to surface. So I think socially it's a better plan. And ultimately, where the metal prices have gone and, things that refined as you go along, obviously the NPVs, 355, 5% discount after tax was the NPV for Los Ricos South. And then that's at 2680 silver and 2330 gold. So if you were doing, a study today, you'd be using prices around that, around $40 and $3,500 gold, giving you about a $825 million after-tax NPV. And, spot price is just looking better and better. Hopefully it keeps on going in that direction. And obviously what I will point out, and Los Ricos North is the same, it was $413 at $23 silver and $1,800 gold. At, consensus pricing today, it would be, $1.1 billion. So really that's about a $2 billion, close to a $2 billion consensus NPV for the district. What this doesn't show you is increases due to inflation, right? All we're doing here is in the sensitivity analysis, which you can find in the feasibility study. So in sensitivity analysis adjusted for increase in metal price, but it doesn't take into account inflation. Now, inflation in Mexico is running 8 to 10%. So the feasibility study was done about 18 months ago. So that's about a 10% increase. And what we're seeing, that would both make sense. The capex in the study was 227. If you apply that inflation to it over 18 months, you end up with around 260 million capex. And we are complete 85% of our detailed engineering, which includes going out and bidding and costing a lot of the components. And the biggest contract would be our underground mine contractor, which that contract is over 200 million. And so that contract for the first 5 years, that's all factored in. So I would say, the study, a general analysis would be OPEX. Even though it's 18 months later, I think we're pretty close, certainly within probably that inflation. And CapEx, I think it's right on the inflation. So about 260 million and 284 in the bank. And we are generating a lot of cash at Peral. That's how we've been increasing our cash balances. At these commodity prices, we would it would just be about 80 to 90 million a year in free cash flow from Peral. So, after tax around 60 million. Mm-hmm. So we'll have that through the build. We got about 4 years of reserves in Peral left.
I can see the sensitivity there in the base case, and then the sensitivity if the silver price goes up. What if it goes down? What's kind of the bare minimum silver price that you would need in order for this whole project to make sense?
Well, all in sustaining is $12. Okay. So a $12 silver price.
Right. We're close to 70 right now. So we're far from that, but just thinking like if there's a 50, and I'm not saying that there would be, but what if, right? If there's a 50% drop in silver price, does it still work? So that's where I was coming from.
Absolutely. Yeah. Yeah.
This also might be a good point to talk about, because you mentioned a couple of times. So you said at the beginning you've broken ground. Actually, that's pretty big news. But it's going to take you 24 months from now to get to first pour. What's on your checklist between now and first pour? What exactly has to happen in the meantime?
Yeah, and it's big news. I mean, we're start off. We told people when we got the permit we plan to break ground in August. So we broke ground in August. What has to happen? The first thing has to happen is, contracts being let. And, those contracts are being let like for underground development, earthworks. We'll be getting close to now, doing contract for concrete work. The thing that we did a year ago was bringing on M3 Engineering out of Hermosillo, Mexico as the EPCM contractor. And they built several of the large mines here in Mexico. So we brought them on and got going on the detailed engineering. If you look at that 24-month, and if you went back to the feasibility study and you look at the Gantt chart, there was probably, I think, maybe even as much as 5 months at the front end of that to do that detailed engineering, to get those tender packages out there, to get those bid packages out there. So all of that happened before we had a permit. So, talk about having, trying to have perfect execution or as close to perfect as we can get. You try to get things in your back pocket, having all that detailed engineering is a big thing. Those 4 or 5 months, you got that. So that's going to accelerate the building of the mill. The other thing is, where can you get early ore? Well, one thing we're doing here is, and it's allowed in the permit, we can do what's some hill slope stabilization where we're going to have a portal going in. And that's over in this area here. And that'll actually generate what it is the structure. The vein goes right up the side of that cliff. And we're going to be bringing that down. That'll generate some early ore from, it's not an open pit, it's more like a slash on a road cut or something, but it will bring down some early ore. And, we're now revisiting the underground life of mine plan from the feasibility study. And, one thing you have to do is you have to look at it and say, well, the metal price has changed an awful lot since the feasibility study. So, what opportunities are there in that? Right? But we have a 2,000 ton a day mill. It's all engineering. We're building it right now. So, that's your probably limiting factor. But you want to go back to your mine plan and design it such that you're still trying to push NPV forward, or metal forward to get good NPV, the best NPV. But you're also saying, I want to design my mine plan so that I'm not sterilizing anything, and so you look at things like that. And some of that, getting very into the technical would be around, do you do things longitudinally in the long hole, or do transverse mining, which you can be a bit more selective. Mm-hmm. So do some of that. But all in all, we look for optimizing mine plans so that we can push forward ore, that maybe we can get ore faster, and so that we can deliver on that 24 months to first pour. That has to be earthworks. That has to be foundations go in, start erecting steel. That has to be a mill. We thought about that mill. That's the longest lead time. It's a 54-week delivery on a SAG mill. Fortunately, we had that detailed engineering done and we ordered it 6 months ago. Mm-hmm. So we got ahead of that. The power line, we're building the power line now, so the power arrives in time. It's a lot of analysis around critical path, and making sure we stay, we keep pressure on that critical path so we don't have any holdups. Right. So
if you look at that land package that you have there on your screen, Brad, what about the long term? You talked about a path toward 17 million silver equivalent ounces of annual production from the district as a whole. What has to happen for you to get to that? What would on the map, where does production have to come from? I assume it's going to be kind of a hub and spoke model or not, but you can show it to me there.
Yeah, so that's in the blue circle there. That's Los Ricos South. So that's where all the action is happening now. But, we can multitask a little bit, right? We can have a separate team that's up here in Los Ricos North focusing on taking that from a PEA to a feasibility study and a permit. We don't have to complete a full feasibility study before we can apply for permit, but we certainly have to have enough of the engineering work done that we can say where where a tailing impoundment's going to go. We'll always build dry stack because it's the most environmentally friendly tailings facility to build. But and we have to understand the deposit a bit better with infill drilling. In Los Ricos North, we here we planned it in the PEA as a open pit. And, things are going better for open pit in Mexico right now. Agnico Eagle just got permitted a very large, brand new open pit in Zacatecas, their San Nicolas project with Anglo, used BTEC. But that project got permitted. So, open pitting is looking better. But one interesting factor there was that what did they do for all that water they're going to use in that big open pit, all that processed water? Well, what we've done is we use underground processing water in Los Ricos South, and we have an underground, we can have an underground mine up here that we think has a lot of water in it. So there's your processed water. But that's a big factor in Mexico, right? In Agnico Eagle, what they did is in a city about 100 kilometers away, they're building sewage treatment. And they're using that treated water, and they're piping it 100 kilometers, and that's their processed water. So that got them their open pit permit. So, we're looking up here now, and we have a separate engineer working on a life of mine plan up here, and building an underground plan as well, because it's pretty similar to Los Ricos South, same size structures, big wide structures. Maybe a combination of underground and open pit. We have to do some work now around, the water resources. I mean, there's lots of water up here. As you can see, there's a big river next to it, and there's a hydro dam. But that's not necessarily, at least with this administration, that may not necessarily be the water you can use. But we do know that we can use the water from underground. So maybe it's a combination underground open pit. And there's some areas, I just, real quickly, I'll just say, this area is where the bulk of the resources are in our Alfavor deposit. And it looks so much, that alone looks so much like Los Ricos South. This is a long section. Now, what we did there, this would be our resource study, which needs infill drilling, and it was designed mostly for open pit. But if you look at that, we said, let's color the blocks here. Everything over 150 grams is yellow, and that's our underground cutoff or above our underground cutoff for Los Ricos South. So, and Los Ricos South, we've got 1,100 meters of strike length that we have reserves on. This is about 1,500 meters, 1.5 kilometers. Here you look also at, the 300 to 500, which is really good stuff. That's in your tan and color. And then it's like Los Ricos South, where we have areas like our Eagle area that's very high grade. We have up here 500 to 1,000 is everything in red. So you see some areas up here and you say, well, those could be some really good starter pits while you're maybe developing an underground. And, this is all predicated on the water resources you have, right? For processing. But I'll just show you a little cross section of that area. Wow, a starter pit on something like that would be amazing. Relatively low, and more work to be done here, but a lot more work. But, 36 meters of 550 grams in, a relatively low strip ratio starter pit. That could make some real big money at the front end. Just like in Los Ricos South, where we have that Eagle part of the deposit, which just gives you massive fast payback, right there, where you're making $500 million after tax in the first 18 months. So my point being is that we look at this as a district build. This, we broken ground. This, we're up working on, it's going to be infill drilling, engineering, apply for permit. We would like to apply for permit by first quarter next year. Have enough engineering information that we can apply for permit. We've got some work to do there. We have to look at trade-off studies. How much underground, how much open pit, how big of a mill, how much water, and those things we're working on now. And then first quarter next year to apply for a permit. And through next year, finish a feasibility study. When, in an ideal world, it may not work out perfectly, but wouldn't it be nice when that mill in the south has the first gold pour, that build team is heading up here to build the next mill? Mm-hmm. And that's how you get from 2 to adding 7.2 in the south to being 9 to this is planned and studied today at 8.8. We'll see what it's going to be, but to be somewhere between 15 and 17 million ounces, all in costs of around $12. Mm-hmm. That's how. And then the exploration in this district, in my opinion, will be generational. There will be generations of mining here. There's so much more to find here. And there's a lot of cash flow to make here. The great things it'll do for the communities in the area, and for all the stakeholders and the great shareholders that we have in GoGold. This is truly working out to be what we had hoped for.
Mm-hmm. But in terms of permitting, you touched upon it there, but maybe a little bit more information on that. What extra permitting would it take? Because I know you have your first pass permitting, but it seems like the permits you announced, they say that they cover the bulk tonnage portion. But I'm thinking about what about the open pit at like Abra and Cerro Colorado, and that, how does that tie into the broader district permitting?
Yeah, when we applied for a permit in Los Ricos South, at that time, open pit was very difficult. And we knew the fastest route was to go for the bulk underground mine. Now things are looking better, but we'll have to apply for an expansion of our permit in Los Ricos South. Now, we don't have to do it for next decade, but for that small open pit operation in the south. In the north, that's more here and now. So we're going to have to, we don't even have an underground mine plan in the north yet. We know the structures are very similar to the south. The big wide structures, but we're building that underground mine plan so we can do a trade-off study between, what it would look like, a hybrid of open pit and underground is what I think we'll end up with. Mm-hmm. So, and we feel that's all very doable.
Does the project work and I understand you feel it's doable, I hear you, and nobody really likes thinking or talking about the what if, but does the project work? Or better said, do the project economics, like the IRR, payback, NPV, do those work if you remove the open pit portion at LR South?
Absolutely. Yeah. And in fact, that late in the mine plan, the small open pit portion doesn't really add much to the NPV. Mm-hmm. Time value of money, it's way out in the future.
Yeah. And it's how many years is that? 10 years?
10 years. Yeah. Decade.
Yeah. What about and you'd probably also have to renew the ejido agreement by then too, by the way, because it runs out in 2022?
No. And we have a right to extend at that point as well.
Without without renegotiating or anything like that?
No, we don't have to renegotiate. No, we have a long-term contract and there's a right to renew.
Right. Okay.
Yeah. But you raise a good point. Like always, your social programs have to be the top. That you always have to have that in the forefront. Like it doesn't, your agreements, yes, you have all your agreements, but, we have to always be working with the community. We always have to be like the best corporate citizen. Like they have to feel the benefit of this mine being there. They got to feel that they're winning. And that is our objective there, because it doesn't matter what are the agreements. Like you're going to have problems if they don't want you there, and I can confidently say that is not the case. Right. Our relationship is very, very good, mm-hmm. And it's always been. with all of our projects. And that's how we've got to build mines over these 30 years, you know.
There's also other stuff actually that you can test there, as far as I understand. So beyond the main zone, and this is at LR South, there's like deeper structures that you've talked about before. Yep. What are you going to test
That's
first?
right.
Which of those is it? Are you going to test any of those during the construction period? And yeah, which of those are you going to test?
Possibly during this construction period, as we, I'm just going to bring up a 3D here. Because there are some old historical workings, and what we want to go after. And you mentioned about the open pit, and you know, how would that affect the project? Quite honestly, I think, and this will be borne out by doing the drilling, doing the work, obviously, you know, but it's, call it my hunch right now, but it is based on some data. This was what they found right here in 1927. And them being Cinco Minas, that operation, they got deep in the mine. They saw what we saw, and all along strike here is that there was a horizon up above that was very wide and very good grade. And in this part, it narrowed down. Now they mined through it, but it wasn't as productive. And then in 1927, they got into this zone, and they found it looked like another horizon. The structures opened up. You know, we have some records down there, not a lot, but you know, like 17 meters of almost 1.5 kilos in a stope that they developed and they mined, and 12 meters of 1.5 kilos. So they were seeing some really good stuff, which was very similar to what they were mining up above here, and very excited about it. And but they were putting limited amounts of capital, because at that time in Mexico, the political situation wasn't good, and it was kind of heading for a revolution. So, and that's all the foreign operators left in 1930. So I think the biggest exploration potential, or the highest value, is probably going to be down here. And this is very consistent, or pretty consistent, along strike for 1,100 meters. And, you know, there was mining here. You know, they left some good stuff for us, but we found this, right? And we're thinking the consistency along strike up here, maybe this is the same down here in that second horizon. So that'll be something that we really want to put attention to. That's where you could really add an enormous amount of value. So that open pit will probably become much less of a factor 10 years from now versus what we might be able to find down here. Now, if we look at this, there's a few ways to get at this. We've drilled a few holes from surface, very long holes, 700-800 meter holes. Very expensive, and the drill, it's actually, that pipe will bend over these long distances, so a little harder to pinpoint it. But down here we have internally, there's an internal shaft, and we will be doing some rehabbing of some of their old workings. This was the old entrance to the mine right here that they had, and that there's a tunnel that's open there. We'd have to get in and make it safe and rehab it, but go to that internal shaft and see what kind of condition that's in. I don't think we'd ever be using it to skip ore out of the mine, but we could use it maybe in the future to lower equipment down, like drill rigs. And if we could get into some of these old workings down there and set up drill stations. Even if not, once we start doing our development, all we have to do really is do some drives out into the hanging wall and build drill stations out here, or maybe a bit deeper down, drill stations out there, and then start drilling a little closer in to that second horizon.
Mm-hmm. Out of those targets, good that you're actually showing me the different targets like that. It's better to visualize it. If you had to rank the targets that you have right now that you think will contribute meaningfully to that 17 million ounce target, how would you rank the targets that you've shown me so far, or just the targets that you have?
Los Ricos North would be the next big target. I mean, obviously not more than target, it's resource, some infill drilling, and those areas up there in Los Ricos North, like on that long section, that's another Los Ricos South right there. So it just, we got to finish the work, get a permit, and go after that. That's gonna, bring us the biggest chunk of that 15 to 17 million ounces. So this is high priority. And then beyond that would be that second horizon in Los Ricos South. That is nearer mine, but this is more, Los Ricos South, that second horizon is nearer to infrastructure we're building right now. But this is better known. We know that that's there, right? So versus the drilling that we'll have to do in that second horizon to see how big it is. We already know we have something very big up here, and just got to advance the engineering and advance the permitting and get it done.
What's the timeline on that? From now to, and I know it's forward looking, so there's more work to be done. But what's the timeline to a construction decision for? Okay, let's put it that way. I'm sorry. How many years is Los Ricos North behind South?
Yeah, I would say, if we can get the work done now on that underground mine plan, which will be done before the end of the year, actually next 2 months, we'll do the trade-offs, get up there, do some more drilling around water, have enough engineering where we know where the mill's going to go, we know where the waste dumps are going to go, we know where the tailings are going to go, apply for permit in the first quarter of 2027, at least by mid-year. And that brings up a very good point. We waited 3.5 years for a permit for Los Ricos South. Do I think we're going to have to wait that long again for a permit for Los Ricos North? No, because I see that with the change in administration, if you really look at how fast permits have come since the Claudia Sheinbaum has been president and her administration, it's been pretty good. I think we're more looking at kind of a year and a half. So, 24 months to build Los Ricos South. Maybe this is, before this is ready to build is 24 months, 20, 30 months, potentially.
So speeding up, kind of like a compounding on speed, if you will.
Yeah. And it would, and I mean, we would love to see that happen. I mean, because, we'll be in the build mode after building Los Ricos South. Can we find a path that will bring that build team to the north, and continue on? And we're trying to make this into a district build. That's what we're trying to do. Trying to make it into a district build. So we'll see. Our first focus is execution in Los Ricos South. 24 months to first pour. Working on every optimization we can to make sure that's the minimum that we deliver. The minimum, 24 months to get to first pour. And our second focus, and it's a parallel team going up to the north and trying to get that one to permit application first quarter next year. And we're hoping that maybe that permit only takes a year. And we'll have enough data to apply for permit. And while we're waiting for permit, get all the detailed engineering all done. And the feasibility study first, and then detailed engineering.
Well, what about the contingency? How much room for error is in all that timeline? By the way, like 24 months. How tight of a time frame have you given yourself there?
Well, Los Ricos, yeah, that's, like I said, 24 to 30 months. So it's like Los Ricos North, it's an aggressive goal, but we're going to work towards that. And see what we can achieve. Obviously, the least defined thing is that part, Los Ricos North. The most defined thing is Los Ricos South. Like for us, like I said, the minimum we want to deliver on is that 24 months to first pour. Like where that's where we feel that where we are with detailed engineering, with where we are with contracts being led, long lead time components being ordered, and our flexibility that we have with our balance sheet because we don't have any debt, that we feel we will achieve that target in Los Ricos South. And we're going to push really hard to try to get that optimum timeline for the North. There's more things that can go wrong with the North. Could be more hangups or delays, but not in the South.
What's the delivery date on the SAG mill and some of the other major equipment? You said you'd ordered that a long time ago, but I didn't hear from other people. I heard that there's slowdowns with deliveries in Mexico overall, so not necessarily mills. But I mean, is any of that affecting you, or what's the timeline there?
No, not really. It was a 54-week delivery, and it was ordered 6 months ago. So that'd be about 6 more months.
Yeah.
That being said, that they told us that it's in manufacturing rate, being manufactured now, and it may even come in a little sooner. So I don't think that's going to be an issue. It's definitely not a critical path issue. Critical path in Los Ricos South will always be, and as planned from early studies, is always the underground. You can only do so many headings or so many rounds a day. And, you start off slow because you only have one heading. And then, you start to branch out in more than one heading in your underground, then you can get more meters per day. But, that's your critical path. I'm not by any means saying it's a problem. I'm just saying we recognize what the critical path is.
Well, actually, the underground portion, that's interesting you mentioned it. I try to look at kind of similar projects, Mexican epithermal vein systems, and they're all over the place in terms of the underground development rates. I mean, there's no like one major benchmark. How's that progressing for you? What's the timeline expectation on that?
Well, the timeline is within those 24 months. It'll take to get to the portal will take kind of the first 4 to 5 months of those 24 months. And then to have enough ore to be commissioning the mill and feeding that mill, but not initially at first pour. You're not at 2,000 tons a day. We allow another 6 months to ramp up to a full commercial production. We've gone with the largest underground mine contractor in Mexico, Camimbi. We did a lot of due diligence. We had it down to 3 contractors, and we decided that we thought, they had the capacity to deliver. And I've actually worked with them in the past. The owner of that contracting company, back in 2004, from his grandfather, I bought the El Cubo mine. I bought myself, and company I led bought Mexico, and we had great success there. So his company has come a long way since then and has become the largest underground contractor in Mexico.
That's a pretty cool story in and of itself.
Yep.
The things that you can do. Have you had how have the ground conditions been so far? Have you had any challenges? Because geotechnical conditions in the historical workings in the surrounding halo, they were only partially known. So any surprises there?
Yeah, so we use WSP, and in the feasibility study, we would have done a geotechnical program. One of the things, and you're right, geotechnical is very important, and that's a factor as far as hitting those timelines. My engineering staff will say we pretty much mine through anything almost, and safely. Obviously, number one thing is always safe, but it's time. Right. So if you look at the South and where we're going first and what we do know about the geotechnical, obviously, and this would be the same with most deposits, the closer you get to surface, probably, and around faults, major faults, that's where you're going to have more of your geotechnical issues. But when you get closer surface and more weathering and more oxidation, you're going to have more of your geotechnical issues. It's good here, and our understanding is there's a thing here called the calcite vein, and they talked about it in all the old reports. And we drilled through that calcite vein, and that calcite vein, or it was a breccia that was then cemented with calcite, and it makes a very good hanging wall. And fortunately, that's over here as well. In it's probably about 70 to 75% of the deposit. The hanging wall is affected by that, what we call the calcite vein. So it's a good hanging wall around this very high grade part. That's really looks like, from all our drilling and geotechnical work, that looks like really good ground. So, that's really good. When you get into areas, we will mine around some old stopes. Those will go slower. This whole mine is paste backfill, which that's, you're taking the old tailings, you're mixing it with cement, you're pumping it back into the voids underground. And when we mine actually some of the old workings, which have good values in them, over in the Aber part of the mine over there, we actually will extract the loose rock in some of these stopes where we can, and then we'll pump them full of the voids with paste backfill, and then we'll actually go in and mine through the paste backfill, and we'll mine it all out. So always with a focus of safety. Obviously, it has to be a very productive mine, but safety is number one. And it lends itself being safer in that it's bulk mining, so it's all long hole mining. Really, the miners aren't they don't work much in the stope. When you blast a stope, obviously the stopes are 20, 25 meters high, so you can't enter a stope. But it's all, remote scoop trams will for the final ore coming out of these stopes, and then the stopes are filled with paste backfill, so lends very well to stability in the mine, and it lends also to, means that you don't have to leave a lot of pillars. Where you have stuff that's better than a kilo a ton, you don't want to be leaving a 5-meter pillar or something there. So with paste backfill, you can mine right up to the paste backfill. So it means that you can extract more.
So you're managing that so that there's no risk to your timeline based on the underground stability. Essentially, that's what I'm getting from this.
And even another thing that we're doing right as we speak. We have WSP in there again, and we're doing 20 more geotechnical holes, and they're focused on the final selection of exactly where that portal's going in. So you're drilling a very flat hole, just slightly angled, and we're actually drilling in to see what we're going to encounter as we establish that portal. And then through the deposit, we'll confirm what we think, which is the stability of that hanging wall, that calcite vein hanging wall.
Right.
Yeah.
Talking about timeline, how are you doing on timing? By the way, for this interview, when do you have to run here, Brad?
No, I'm good. I'm down here in Mexico.
Good.
So
good, because I do have
not too much today going on. So
it is a Monday, so you got to pace yourself on a Monday, otherwise you're not going to make the weekend.
Well, I've got a few other calls that have been coming while we've been speaking here. I've noticed on my phone, but I'm down in Mexico. We're headed to site on Wednesday. We'll have the whole team down there, and a lot of these things that we're talking about here are unfolding, and they're doing that geotechnical drilling right now. Get to see some of that stuff up close. And then a thing that I'm really, really interested in is some of our plans around that hill slope stabilization. So that could, we have a plan here for how we're going to slab off that hillside, and you go in and kind of pre-shear it first, and then blast it off. Pretty minimal kind of disturbance, but we could drop down maybe 150,000 tons of ore, so 2,000 tons a day buys you a little bit of time.
Well, yeah. And actually where you are, you're closer to Parral, right? I mean, that's where the operation is in Chihuahua, right?
Where I am right now, yeah, our country office is in the city of Chihuahua. We're about a 2-hour drive to Parral.
Okay. How's that going, by the way? What's the state there? What's the LOM there? I think that's an important part as well.
Yeah, about 4 more years. Sorry, 4 more years, life of mine, and it's going really well. We're still mining at the original pile of tailings here, over at the Pared tailings, La Pared, and then the Esmeralda. We're now mining those as well, and they're working out really well. So recovery is going good, production is going good. You look at our last results, and you look at things and you say, "Oh my God, the all-in sustaining cost is high," for silver equivalent ounce compared to other quarters. And of course, our analysts understood that. I mean, that's the problem with announcing a cost on a silver equivalent. Makes it very difficult, right? Because it's the ratio of silver to gold. When you put it back to the same ratio of last year, the all-in cost is around $20, $25, $26, $27. Pretty similar, because the production has been pretty similar, and our costs are pretty similar. Have been pretty steady. But basically it's every 10 days, we ship, and I'd say every 10 days we're producing around 400 ounces of gold and around 30,000 ounces of silver, and 3 times that is a month, and costs us around $4 million a month, and that's generous in cost. So at these prices, it's generating 80 to 90 million US after costs, and then you take your tax off. Now this is taxed at a little bit lower rate than in situ mine, because this is actually industrial processing.
Isn't it like a cleanup? Something that you can get?
It is. Yeah, and that's what we're doing. These are old waste tailings. So there's what it looked like when we started. Of course, it looks a lot different than that now. These tailings were 20 million tons that we truck out of that city. You can see the city. Well, the city is there because of this mine. This mine operated 300 years. And the biggest, we're not responsible for any of the past environmental liability here. They continue to maintain ownership of the tailings. And what we have is a contract to irrevocable right to process and irrevocable right to access these tailings. And you can see just in the background here, actually, those are the Esmeralda over there as well. So it gets the tailings out of the city. The city gets their land back for development. The biggest issue they had with tailings is dust from the tailings blowing into the city during the windy season. So we did some baseline studies just to see, and really there wasn't much effect on groundwater or whatever. But anyway, we take those outside the city. Again, we built this in 2013. First pour was June 2014. So 12 years continual production here. The real thing is here we developed some technology around retreatment of tailings that nobody had done before. And it's agglomerated heap leach of these old tailings. Tailings are like sand. So we mix them with cement, we pelletize them, and then we put them out on a heap, and we leach them in a zero discharge system. We use sodium cyanide leaching, and we extract the silver, gold. Now, along with that comes some base metals. So there we use a technology called SART technology. Mm-hmm. And that technology, the biggest thing it does for you is it regenerates your free cyanide. When the cyanide, sodium cyanide is great. It will bind with silver, gold, and the bad part is it will bind with copper and zinc, which at the cost of sodium cyanide is not a very effective way to be producing copper and zinc. But until you put in a SART plant, because that SART plant then separates the cyanide from the copper and zinc and gives you back an atom or a molecule of sodium cyanide that is effective again to go back into that heap and then leach out gold, silver, and copper and zinc again. So with this plant, what it really does is every day it regenerates about 5 tons of sodium cyanide, and sodium cyanide's about $3,000 a ton. So, and it gives us copper paste or precipitate, sorry, and zinc precipitate, which then we sell to Samsung, which covers all the costs plus some extra of operating the SART plant. So really, when you put all those technology, could we patent this? No, because it's existing technology. The agglomerate heap leaching is not new. SART technology is not new, but we figured out, and in the beginning it wasn't that easy. Nobody had done it before, but we figured out the perfect combination, the strengths of the cyanide in the early parts of the leach curve, material handling, how much cement, how high you can stack it and have good percolation. All these things we figured out in the field, and this thing works really nice. The other added benefit is we pay the community about $75,000 US a month. The municipality, that's probably about 5+% of their municipal budget. We've done just this year, we built a park in the city, mostly a sports park, basketball, that kind of stuff. And we do a lot of stuff for the community, the jobs. They get the environmental cleanup. And that plays very well with this administration because in Mexico City, because one of the agendas under this administration in the mining sector is to look at the 500 tailing sites that they have through Mexico and see how they could clean them up. So this becomes another potential option for some of them. And that helped a lot in our permitting process. The environmental authority has been here many times on a visits to understand it, and to see the technology. So it's technology developed in Mexico that can play into this current administration's agenda of cleaning up tailings.
Mm-hmm. Yeah. Well, talking about cost, it also makes me think about the price at which you're selling that gold and silver. Is that a fixed price there that you said with Samsung?
Yeah, that's right. No, not a fixed price. It's market price.
Would you ever consider?
But we don't sell the gold and silver to Samsung. The final process is completed at Metmex Peñoles, about 2 hours away. That's the refinery, and we get spot price for the metals.
Is there an option for you, given where the prices are right now, which is to say pretty high? Would you consider hedging here?
Always the question, and obviously in hindsight, you say, well, hey, why didn't you hedge when silver hit $125, right? Yeah, and we hear that more because we're starting to see more generalists coming into the space, and that's one of the questions. The traditional precious metals investor funds, retail, have been very anti-hedging. So at some point, do you say, look at the metal price and you say, well, do you hedge 20%, like the oil industry would do? That's a typical hedge for them. They a lot of times they'll hedge 20% of their production, which will protect their downside on, on the cycle, and say, well, they'll always be still in business, if the oil price crashes, right? So, yeah, those are things that we have talked about. Traditionally, we haven't done any hedging. No.
Right. Okay. What about the capex? If we go back to LR South here, the capex that you talk about is 227 million capex.
Right.
How much of that is already history, essentially? How much of that is kind of fixed? I'm really trying to figure out how realistic that number is.
About 7 to 8 million is spent. And we keep our EPCM contractor, we keep a tally of our costs now that we have firmly bid costs against the feasibility study. And we're around 260 million bucks, less a little that we spent. So in 260 million change, we're probably about 255 left to spend.
Okay.
And that's worked out because the inflation's been 8 to 10%, and it's 18 months. So that kind of works out right around with inflation. The study was a good, realistic study, and the actuals are working out to be in line with inflation adjusted costs in the study.
Mm-hmm.
Yep.
Yeah. How high would capex have to be, or how much would it have to blow out in order for you to consider another equity raise here? Like if it ends up being 300 instead of 230, do you have to go back to the market for equity?
No. We're at close to 290 million, and we're generating after tax about 60 million every 12 months. So we're in pretty good shape there. Mm-hmm. And I really don't think it's going to blow out. I know it's, being this far in the detailed engineering, I don't think we're going to have a blowout on capex. The factor that is least determined right now, like that mill, man, that's pretty much just put it together now. We got everything priced, and we got all the geotechnical has been done on the ground. We wouldn't think that we're going to run into an area where there's, 50 meters of overburden where we thought it was going to be ground rock, get to the solid rock in 10 meters or something. But the underground, obviously, and no matter what anybody says, you really understand the ground once you get underground and start mining, test mining, But I don't see an issue there.
Mm-hmm. Yeah, it's basically the capex is mainly three things, right? It's the underground development, it's the paste backfill, and it's the start plant. Those are the three main pillars. Is that fair to say?
Yeah. It's the plant. It's not. We do have a small start plant in Los Ricos South as well, but that's just to reduce process costs some. Mm-hmm. But it's just a conventional whole ore leaching mill, agitated leach with cyanide. We're dealing here with all oxide material. And we produce a doré bar. So the mill is very well costed, and we don't see a blowout there. And in the underground, we don't see a blowout either. But I'm saying the underground is, if you were asking me, where is it possible to go off feasibility costing, more in the mill or in the underground? Obviously in the underground.
Right. Yeah. Under what scenario would you have to go back to the market here before commercial production?
I don't see a scenario, honestly. Look, if it was going to be 400 million capex, we obviously have to go back to the market. We have been, people have come to us offering revolvers. The cost of that's $3 or $4 million. If you don't use them, you're paying that kind of fee to have that insurance of, say, another 50 million US revolver. If we want to be really, really conservative, I guess we can go and do that. We certainly have the extra money. We could spend $3.5-4 million to buy that insurance, but there's no rush to do it. We got lots of cash and no debt, and it's listen. We know how to build mines, and it's kind of nice building one out of cash. You have a lot more flexibility than if you have the technical people from the bank looking over your shoulder a bit too, right? So I think, but we're in a great situation. Our balance sheet is probably, one of the strongest for a company our size, without debt, that built a mine recently that I know of.
Yeah.
Yep.
It's not, it's a good position to be in, as opposed to, there's oftentimes financing uncertainty before the build out starts. So that does cover it. Does that cover the money that's coming in that you just talked to me about from the processing and whatnot, from the tailings? Does that cover everything else? So G&A, the exploration work, everything else that you're doing is covered?
Actually, just the interest on our bank balances right now cover all the G&A. So, yeah, and it's been paying for the reprocess. Has been paying for everything. As far as engineering we're doing, as far as it allows us. What it allows us to do too is, if we had a bank here and we were sitting on a project debt financing, they would be saying, Los Ricos North, why don't you hold off on that until we get closer to, till you have first pour or something like that, till we see how all that kind of stuff is going to play out, right?
Mm-hmm.
So, yeah.
How's the process going of finding mining contractors? So kind of flipping it here from capex to opex, trying to figure out what that's going to look like. Yeah, how's the bidding process going?
So the underground mining contract will be the biggest contract in everything here. So that process, we started that over a year ago and went to, in our due diligence, we shortlisted to three contractors and visited mines, not just in Mexico and Canada, where we had the opportunity, graciously we were afforded the opportunity to go see them in production or in doing their job. And, so that helped with our due diligence, and many considerations went into it, not just price. We needed the most competitive price, but you had to look at, the contractor and to, do what you thought was his ability to ramp up to what's a fairly significant operation, right? So, and that's ultimately we landed. And believe me, one of the number one criteria was their safety record, right? So we arrived at a point, and we got to we had the confidence that Kamembe would be able to deliver.
And that would be irrespective of the mining method or the plant throughput and everything. Because again, we talked about geotechnical. We didn't talk about hydrogeological, but you kind of touched upon as well.
Well,
if those conditions would,
yeah, that's always all part of the geotechnical study.
Yeah, but I mean, if those conditions kind of change, and then you make any adjustments to the mining method or the throughput, would that change the mining contractor that you're going to have?
Yeah, so we know enough here about what the mining method's going to be, but the short answer is no, it wouldn't change our opinion, because they are the largest mine contractor in Mexico. So they're doing pretty much every method. I don't know if they're doing any bulk caving, but besides that, I'd say they're pretty much doing every mining method that kind of I know of. Shrinkage, cut and fill, long hole. So they're very well experienced.
Well, the moment you tell me you're going to do a block cave on this project, we're going to have a somewhat of a different conversation, I think. So
a block cave at 11 meters wide wouldn't be what you want to
do. We talked about time and money here, Brad. We talked about the future of the asset. Let's talk a little bit about the risks. What is the most crucial thing here? What keeps you up at night? What do you think about the most?
There's always risks in mining, right? And all you can do is you try to mitigate risk. The number one, one of the big risks in not really in the mining, but in operating mining company is your commodity price, right? So you try to, have projects that have good margin. This is good margin. You try to you have a good solid technical team. We have a good solid technical team. We're using a contractor who's going to be a big part of the whole puzzle here, and we have faith in that contractor. And I've got a little history with them too, so I know them. So the underground if you're to evaluate the risk, I'd say the underground, until you get underground, that's will be your not high risk, but it's on a relative basis, it's a lot. It has higher risk than constructing a mill, right? Then and safety. Like underground is it's fortunately it's a bulk underground mine, so there's the amount of the safety should be easier because it's a lot of remote scoops and big open stopes and that kind of stuff. But we have to be on top of safety all the time. And community, that's another risk. You get the community against you, you got a problem, right? And we have working on the team for some time, some extremely good people in the community. And, have worked for some great companies like Agnico on community. And there's a company we try to emulate, what they do with community and what we've always done. So that's all you can do about risk. You can just try to mitigate them with those things that I mentioned, right?
Mm-hmm. What about water? Water is a big deal in mining. definitely
Yep.
Mexico. So what about that? What does that look like? Is that a risk?
Yeah. So water is, I don't see it as a big risk. I see it as more on say if your underground mine, you say, well, I'm building a 2,000 ton a day mill. So that's a limiting factor. You're at 2,000 tons a day, right? I see water as I have this much water, right? So, and where are you getting your water? In Los Ricos South, we get our water from the underground. Fortunately, there, we know a lot about the underground, and we have one enormous underground well, which is this one here that goes down 850 meters. And our estimate is just sitting there without recharge, it has 400,000 cubes of water in it. And annually we'll consume about 125,000 cubes.
Mm-hmm.
And we've also, because water is, a key point in Mexico, we've also, we're using dry stack tails. So we reprocess, or we squeeze as much water out of those tailings as we can, and, recycle the water. So we're using about 14 cubes of water every hour. So, I don't see a big risk of water in Los Ricos South. I don't in the north, depending on the size of mill that you build, because you can use the underground water from your underground operation. And but I know less today about the north as far as what the recharge of that underground mine would be versus the south. But I think it's pretty good, because we were drilling with 7 drill rigs up there, and our water source was the old underground mine, and we were taking water for 7 drill rigs, and we never even put a dent into it. So probably pretty good recharge. So, but it will be a factor that you look at when you're deciding how big of a mill you can build in the north. So we want to do some more work around that.
What about dewatering? Is that something you have to do?
So where we're going to be working initially, we're above the water table. Like even down in the Eagle, we're still above the water table. Over here, obviously dewatering would become a factor when you get down into here, eventually. But not much of a factor to what we call the cinco minas level, which is right here. That's where about the water table is today.
Mm-hmm.
Yep.
Yeah. Could you show that again? Just go back to
Yep. This is where this comes in right here for this part of the mine. That's the cinco minas level is right here.
Right.
So that's where everything above that's dry.
Okay.
And there's no pumping out of the mine. So, to get down into these later in the mine life, to get down into there, I don't think it's going to be a big pumping issue. I mean, they didn't report from all their old records that keeping the mine dry was a big issue for them.
Where's the old Abra shaft on this?
Right here.
Is that still...
That goes in at the cinco minas level. Yeah.
Is that usable?
Possibly. That's when we get in there, we're going to look at it, and it could be potentially one plan to rehab maybe part of it and go down and establish, some development off it and do some drill stations out here for drilling those deeper horizon.
Right. Okay. So if that's usable, does that lower your risk in terms of maybe dewatering if you go to the lower levels and whatnot? Because it's pretty deep, right, this shaft?
Yeah, the shaft's pretty deep. It goes down to about 600 meters. Mm-hmm. Like on dip length, on this angle, you're down 850 meters here. That's to the bottom.
Right.
On vertical, obviously, it's about 700 meters down.
Mm-hmm.
Yeah.
Yeah. And so that would make the risk of the watering challenge just lower if you can actually reuse it, though, right?
Dewatering, yeah, it'd be there's a sump down there, right?
Yeah,
it would have a sump. So yeah,
okay. What about mining dilution? I mean, you talk about 32.1% planned dilution. That's is that what is that attributable to? Is it kind of mining to those adjacent to the old voids, as
Some of
opposed to
that
kind
would
of?
play into it. The other thing is, I think when WSP did the work that they did, they probably don't have as. I think that that's going to be reduced a bit now with the work that we're doing these 20 holes and a better understanding. Internally we did a big study around this calcite vein, and it actually goes back to I mentioned before, Dave Duncan and his team, some of that historical work, and they found a report that somebody did on this calcite vein back in 1918 or something like that. And they started there, and then we went back and a re-logging of a whole bunch of our core, and that's how we internally formed good opinion on that calcite vein. So I think this geotechnical drilling that we're doing right now will add more validity to our internal work, but because plus 30% dilution on 11-meter wide structure, that's pretty conservative. That's a lot of dilution for 11-meter wide long hole mining. So, but anyway, it works just fine at 30% dilution. I would not expect it would be more than that.
What about recoveries? What do you think that's going to look like? I think you've shown that in FS that it's not really a challenge. So metallurgy is not really a challenge right now.
No, we get about 90% recovery.
Yeah.
And we've done an enormous amount of metallurgical work with Lakefield in Ontario. So I would expect that it's going to be in line with, what we did. And we've looked at, a lot of optimization options, like, adding auction to your agitation tanks and things like that. And, there may be more room for optimization once we get into production. Typically, sometimes there is, but I think that we've done feasibility level and a lot of it metallurgical work. And I think that we're good on the metallurgy.
Yeah. Well, which of those things is the AISC most sensitive to? Me, if you look at the dilution, you look at the recoveries, just everything that we've talked about so far.
Well, yes, recovery. Obviously, if you can get 5 more points, that's enormous, right?
Mm-hmm.
It's essentially right to the bottom line, right?
Yeah.
So recovery, I would say, costs, underground development costs would be, depending, not that much really. How much you do transfers or how much you do longitudinal. A little more development on transfers, but it gives you more flexibility in the stope. And especially if you're going to get into areas, I think about 75% plus of this mine will be really good ground conditions, and then the other 25 will be normal, and maybe 5%, 10% might be some challenging, but not but if you're doing a transverse, it gives you more options when you're if you do run into probably the small amount of area where you have dilution because of ground conditions, right?
Right. Yeah. Yeah. Fair enough.
Yeah.
This is kind of like a wait and see thing as well. I think when you look at the feasibility, none of those things were, at least nothing springs out to me as a deal breaker to call it. So there's nothing else that I could follow up there on in terms of risks. What about security? How's security in Jalisco? Is it a risk toward the future with everything that's been going on? Since you and I spoke, Mexico's been a lot in the news from a security perspective, mostly, unfortunately, negatively. So what's the situation for you?
So we have been there since March 2019, and we have not a sniff of an issue. So it's been a pretty quiet area. So But, we have been in this country a long time. We've never had a security issue in the 30 years. And, we find that the government is very responsive, and we'll work very closely with them. And if anything ever develops, like with everything that's happened over the last year, we've had meetings with them, and the meetings have been with all the companies, and they made it very clear that if you have a security issue, work with us. We will go as far as establishing military at your site. We'll expect you to pay for their accommodation, right? And so, well, we don't need that, but So, I mean, what can I say except that we've never had security issues in Mexico? If I can think of in 30 years, when I think one place we were working, which was very contentious, as far as narco activity. And, one approach we might have had, we simply talked to the government, and, it was never heard from them again. It was just, I don't know. I would imagine they would have some back channels, but anyway, the government of Mexico has been very supportive for us in security and never had an issue.
Mm-hmm. Yeah. Oh, that's I think pretty much the same thing you told me 2 or 3 years ago, and since then nothing's happened on your end. So that
nothing. Zero.
Yeah. What am I forgetting to ask you here, Brad? I think we talked about a lot. It's kind of a good reintroduction to the story that's kind of changed again a lot in the last 3 years. So what am I forgetting to ask here?
I think you're being pretty thorough. Gee, you've really done your homework. But no, I'd say the other thing, the philosophy of how we operate in Mexico, it's almost like we are a Mexican company. What we bring is the international capital arm to that company. We bring, obviously, the governance, the strong governance, so that we can have, these players trusting us and providing capital, or those large institutions. And it works. We have 300 employees right now, and that's going to grow a lot. But there's like 6 of us who are not Mexicans, right? Yeah, there's 450 years of mining here in Mexico. They're very good at it. We're very fortunate to be welcomed in this country, and for now 30 years, and to be able to build mines here. I often say I have, and it's true, I probably have more friends in Mexico than I have in Canada. I've never really worked in mining outside of Mexico. So it's, all the stuff in the news, it's actually a great place to work. It's a great country to work in. You can get stuff done here. They had a little bit of a rough patch there, last administration around permits. I think that's pretty much worked out. And the Mexican people are tremendous people. They're hard workers, and we're very fortunate just to be part of it.
Good. I really appreciate the overview. Maybe a couple of more points here to close it off, just before we close this off, Brad. What about marketing? Are you going to keep marketing the company now that, again, you said you don't really see yourself needing capital? So yeah, are you going to keep marketing?
No, yeah, absolutely. We're out there marketing, and we want our shareholders to understand what we're doing. We want to be very transparent. We want to will be a lot of updates through the whole process. With excellent execution, there's a lot of value to be generated here. And, one of the biggest assets I have in my career is the trust of these shareholders. Capital, for the last 20 years, it's been capital has been accessible to us. And, the mining industry, it's an industry that consumes a lot of capital before you ever make any money. So that part of it, that's gone very well. I mean, we just keep on doing what we're doing, but we want to keep those, be transparent, keep our shareholders in the loop, and watch this thing develop. As long as it's being built, it's going to be very rewarding and very, very interesting to see this come together.
When you're out there, and I've seen you a couple of times at conferences, but when you're out there and you're talking to the actually smart people, what are they asking? What's the most fair criticism they're giving you of GoGold?
I got to tell you, in my career, this has been the period that the least amount of criticism. Usually somebody has some criticism, but it's been pretty, I don't know, things are coming together fairly well. I guess a lot of that has to do with, and we're in a tremendous bull market, right? Everybody's happy.
Yeah.
Nobody's happy when the metal prices are crashing. Doesn't really matter what you're doing. So, people are very, very optimistic. And no, I can't. I really struggling to think of. You hit on a lot of the questions they're asking. Do you have to get more capital? That's a big one, right? What keeps you up at night? What are the risk factors? I think we've laid them all out here. So, execution. That's what people are focused on. Execution. Here we are. Everybody recognizes there's going to be a lot of value created when you get this thing up and running. Will there be hiccups in the execution? That's what, the investors ask you, right? So we've done everything. We've had a lot of extra time. This is probably the most engineered project that I've ever been involved in building. That's good. The plans are, a lot of planning went into this one. So I think the execution is going to be very good. I feel very, very confident about the execution. And I know that we have a very strong team. So when the little bumps in the road arise, as they always will in mining, we have a team who can deal with it.
Yeah, I think that's pretty much the only thing you can do in mining is be prepared, because things can and do go wrong all the time. So that's a fair point. I'm sure there's a bunch of stuff I'm forgetting to ask you here, though. So for people watching, listening, whatever I'm forgetting to ask Brad, let me know, and I'll ask him in our next conversation. One last thing here, Brad. What's the catalyst calendar going to look like? Give me a bit of a summary. We talked about a lot. You have a lot of stuff on the go. You have your drilling, so that there might be assay results you're building out. So a lot of things. If I start paying attention to GoGold right now, what am I going to see over the next couple of months?
Yeah, over the next couple of months, I think one of the big catalysts, the South, and breaking ground, but everybody's expecting that. That's a kind of an information that will, there will be some information releases along the way here, and just as the project's progressing. I think the timeline. Like I said, we're gonna execute on 24 months, but maybe there can be some optimizations that can help secure that for sure, and maybe speed it up. But I think a lot of the catalysts are going to come out of Los Ricos North, because that's a more than doubling of what we're doing here. So if that whole plan starts to really formulate over the next 6-12 months. Imagine how that will value the company. I think today, Los Ricos North, there's not much value being put on it, or not as much as we feel like we understand it and we know the value it can add. If we can really, really, catalyst-wise, get out information on a permit, like a permit for Los Ricos North, or even the application for permit, and then a permit will be enormous, So as working towards that, and as the ultimate study comes out here in Los Ricos North, and we start really putting more and more meat on the bone as far as what the value will look like, and that it becomes something You should look for catalysts that are more cementing that this is really a district build, not just Los Ricos South.
Mm-hmm.
And look for a lot of stuff in Los Ricos North over the next 6 months.
It's been a good overview. It really has. I think we're close to 2 hours actually. So it's a good, again, reintroduction to the company. Really appreciate you putting so much time on me. It's been a pleasure. Thank you so much for doing this, Brad.
Great. Thank you.
And before everyone leaves, though, I still have a couple of more things to say. The fact that this company was interviewed here today doesn't mean they're necessarily a good nor a bad company. We're not here to endorse or attack anyone. We're simply here to ask a few questions. If you find that we have failed in asking a question that you would have liked to hear an answer to, please let us know by emailing antonio@resourcetalks.com, and we will try to correct that mistake in a future conversation. If you made it that far, you probably know this, but I will remind you nonetheless, mining is a risky business. Losing money is the norm and should be the expectation, as mineral exploration, development, and extraction is an extremely risky industry where the performance of individual companies typically depends on many different moving parts, including company-specific factors like geology, financing ability, hiring methods, and many others, as well as other things that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more. Too many to list here, really. Moreover, these companies are typically in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which often results in shareholder dilution. They raise money by issuing new shares. Even if the CEO promised they won't have to raise capital anymore, I've seen it over and over again. It still can, and it does happen, which is why you need to stop and think. You need to do more research and not rely solely on what the company tells you. Furthermore, as a general rule of thumb, you'd be better off understanding that all company communications, albeit this interview or their website, their presentation, their news releases even, and of course their social media and everything else, all of that is intended as marketing. And although we at Resource Talks do not make buy or sell recommendations, even if you ask us, we just don't do that because there is a clear conflict of interest given the nature of our business, which sells content producing services to these companies. Even though we don't do that, many accounts and channels out there do that. Exactly. They do give out direct recommendations, even though they are often paid for opinions and they're worth just as much as you paid for them, which is to say nothing. And you should be aware of that inherent bias. You should not blindly trust people on the internet. That bias is not always going to be clearly disclosed with everyone out there. So it's just safer for you anytime you're watching any type of company specific content to approach it with a big dose of skepticism. And just assume that the party telling you about it is biased, oftentimes in multiple ways. They might own shares. They might be paid by the companies, or I should say they often are. And that bias is not always going to be clearly disclosed with everyone. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentive, but instead double check if what they're saying is true by using setterplus.ca. Unfortunately, at least in my understanding, nobody out there has any special predicting abilities. The CEOs don't possess any superior knowledge, and they cannot know about what's going to go up, what's going to go down, or what's going to go in circles. And none of us know whether any of the company's activities that we discussed today will result in a success. Again, given that we're talking about very high risk activities where most of the times it ends in failure. The vast majority of the times it ends in failure. Also, unfortunately, try as I may, we won't always catch all red flags or all challenges with the company. So even if we did ask a few tough questions in this conversation, don't rely on this being all of the important and tough questions. Again, these are complicated startups with many moving parts. They require rigorous, I'll try that again, but they require rigorous due diligence. Resource Talks and its hosts cannot guarantee the quality of anything presented in this video, and you cannot hold the company, the channel, or its host responsible for any losses or damages stemming from the way you decide to use the information you're just presented with. Viewers, listeners, and readers acknowledge and agree that the information presented herein does not constitute a solicitation or an offer to buy or sell any security or instrument or to participate in any trading strategy. Resource Talks and all parties involved in the management of this business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, howsoever caused, arising out of any use or reproduction of the content published and distributed by resource tags, or any decision made or action taken in reliance upon it. By consuming this content, all viewers vow to release resource tags and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say it's a lot of lawyer talk, just saying you should not blindly trust us or anybody else on the internet. And you should always do your own research, as cliche as that may sound. Once again, social media is meant for entertainment. Setterplus.ca is where you do your research. That's an official government website. That's where you find the company's official filings. And I encourage you to read and analyze the management information circular, the financial statement, the management discussion and analysis, and whenever available, the NI 43-101 technical documents at the very least. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. As mentioned earlier, the chances of even the best analysts in this sector losing money are very high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I'd listened to more often earlier on in my career, which says, quote, "If you don't understand it, don't do it." Unquote. Thank you all for listening, and I wish you a great day ahead.